Okay, SOFI options trading. Sounds complicated, right? But what if we just chat about it like we're grabbing coffee? Let's say you've got, I don't know, like $100 and want to try this options thing.
Yeah, most people I talk to are like, what even is an option? It does sound kind of mysterious.
It's definitely not like buying regular stock.
Right.
So, okay, you've got your call options and then your put options,
Mhm.
like two sides of the same coin.
Yeah, think of a call option like you're betting SoFi's stock price is going UP. You're basically buying the right to buy SoFi stock, but at a certain price.
Oh, okay.
That's the strike price.
Yeah.
And you only have that right until a certain date, the expiration date.
So if I think SoFi is going to do really well, like their stock price is going to shoot up, a call option is how I can make money from that.
Exactly. Now, a put option, that's the opposite. You're betting SoFi's price is going down. It's like you're buying the right to sell SoFi at a specific price before the expiration date.
Got it. Calls for up, puts for down. Easy enough. But let's just stick with call options for now. Yeah, we're kind of focusing on SoFi's growth potential here.
Makes sense. And SoFi is definitely interesting in the fintech world. I mean, their revenue growth is projected to be 26% year over year for 2024. That's pretty impressive.
Yeah, but I've also heard SoFi can be volatile, like up and down a lot. Doesn't that make options even riskier?
For sure. And that's why we're talking about, smart ways to approach this, especially if you're starting with a smaller amount of money, like with $100. Rule number one with options, and especially with $100, is protect your money, right?
So no getting rich quick schemes here.
Not really, no. It's more about learning how it all works and staying in the game long enough to actually get good at it.
Okay, so slow and steady wins the race. Makes sense to me. So how do we actually do that? Protect that $100?
Position sizing is key here. Don't put all your eggs in one basket, so to speak.
Okay.
Like imagine betting on a few horses in a race. You wouldn't put all your money on just one.
Right, spread the risk. So how much should I be risking on each trade if I've only got $100 to start?
I'd say a good rule of thumb, especially when you're starting out, is risking maybe $25 to $50 max per trade.
Okay.
That way, even if one trade, doesn't go your way, you've still got some money left to try again. You're still in the game.
So even if things start going bad, I won't lose everything all at once. But then how do I know when to get out? Like when to cut my losses?
Stop loss order. Think of it like setting an alarm clock to wake you up if things go wrong in your sleep.
Okay, interesting analogy.
You basically tell your broker, like, if this option loses 50% of its value, just sell it automatically.
So no sleeping through a massive loss thanks to my alarm clock.
Yeah.
This is starting to make sense. But then there's weekly options. I keep hearing about those. What are those all about?
Weekly options are like the fast lane of options trading. They expire every week, so there's potential for quick profits.
Ooh, quick profits. Tempting. But there's got to be a downside, right?
Of course. The downside is they're also subject to what we call rapid time decay.
Time decay.
Basically, it means that option loses value really quickly as it gets closer to that expiration date. Like, imagine an ice cube melting.
Got to move fast or it'll be a puddle.
Yeah, pretty much. There's a term for this, actually. It's called theta. Don't worry too much about the technical details, but just know that higher theta means the option's value is decaying faster.
So with weekly options, it's a high-speed game.
Exactly. It's a bit like riding a roller coaster, only the market is controlling the speed and the drops, not you. Now let's step back for a second and remember that SoFi's stock price, it's not just doing its own thing.
What do you mean?
Well, it's influenced by the whole market, right? Like interest rates, those are set by the Federal Reserve, and how the tech sector is performing overall. Even political news, like tariffs, can impact it.
So I can't just focus on SoFi itself. I need to pay attention to, the big picture.
Yeah. Think of it like trying to understand the tides. SoFi might be a great boat, but it's still going to be affected by how the whole ocean is moving.
Okay, I see. So we've got the roller coaster of weekly options and the tide of the overall market. Any other, helpful visualizations?
Sure. Picture this. SoFi's stock price is kind of bouncing between two levels, like a tennis ball, right?
Okay.
The lower level is what we call support. That's where buyers tend to step in and buy the stock. And then upper level is resistance. That's where sellers usually come out.
So SoFi is like playing ping pong between those two levels.
Yeah.
So what are those levels for SoFi right now?
Well, based on your research, support seems to be around, let's say, $13.50 to $14. And resistance, that looks to be between $15 and $15.50.
Got it. So that's the range to watch.
Yeah.
But why does this matter for actually, trading options?
These levels can actually guide you in making decisions. So, for example, if SoFi's price is like really close to that support level, it might be a good time to buy a call option
Oh, okay.
because you're betting it'll bounce back up, right?
So support and resistance, they're like my trading buddies, helping me figure out when to jump in.
Exactly. Now let's talk about sentiment. Basically, what people are feeling about SoFi.
So this is where we check the rumor mill.
Not exactly rumors, but more like the overall mood. Are people optimistic about SoFi? Or are they kind of pessimistic? That's sentiment.
So what's the sentiment around SoFi right now?
It's kind of mixed, honestly. Some people are bullish on it,
Bullish meaning,
meaning they think it's going to go up.
got it.
And then you have others who are bearish, meaning they think it's going to go down. So there's no clear consensus.
So no easy answers, huh?
No, not really. And that means that doing your own research, your own analysis, becomes even more important. You can't just rely on what everyone else is saying.
Makes sense. Anything else we should be keeping an eye on?
Actually, yeah. SoFi's next earnings report is coming out on April 28th, 2025.
Okay, what's an earnings report again? Refresh my memory.
It's basically like SoFi's report card, right? They announce how much money they made, how their business is doing, and what they think will happen in the future.
And why should I, as an options trader, care about this?
Because earnings reports can cause big price swings, like huge EE. If SoFi does better than expected, the stock could jump way up.
Oh, wow.
But if they miss the mark, it could plummet.
Sounds like April 28th is going to be a wild ride.
It often is with earnings reports. Things can get shaken up a lot. Okay, let's put all this together now and imagine a sample trade. Let's use those $15 call options that expire on March 14th.
Okay, perfect. Show me how this all works in action.
All right, let's say you buy one of these call options. It costs you about $7.25.
Okay.
And each option contract, that represents 100 shares.
Right.
So you're basically paying a $25 premium for the right to buy 100 shares of SoFi at $15 per share before March 14th.
Okay, $25 out the door, what happens next?
Well, for you to actually make money, SoFi stock price needs to go to you. Your break-even price would be $15.25.
Break-even price, meaning
It means that's the $15 strike price of PLUS. That's $0.25 premium you pay.
Gotcha.
SoFi needs to go above $15.25 for you to actually start making money.
Okay.
If it's below that, you'd be losing some or all of that initial $25.
Okay, got it. And what if SoFi takes off? How much could it potentially?
It depends on how high SoFi goes before March 14th. Let's just say, for example, it reaches $16. Your option could be worth like $1 or more.
Wow.
That's, at least 4 times what you initially invested.
A potential four-bagger?
Yeah.
What if I'm wrong and SoFi goes down instead? How much could I lose?
Well, the good news with options is your risk is limited to that premium you paid, that $25.
Okay, good.
Remember, you're not actually buying the SoFi itself, just
Right.
the right to buy it. So if SoFi's price drops and you decide not to exercise your option, your maximum loss is just that initial $25.
Okay, so limited risk, but big potential rewards. That's the options game, huh?
That's the basic idea, yeah. But it's not Jay's tea about placing trades. It's also about learning from every single trade you make. And that's where a trading journal comes in.
A trading journal.
Yeah.
Sounds kind of like homework.
I know, but it's super valuable, trust me.
Okay, why is it so important? I'm curious now.
Think of it like a diary for your trading journey.
Okay.
Write down, what trades you made, why you made them, what happened as a result, what you learned from it. It can really help you spot patterns, see what strategies are actually working for you, and avoid repeating the same mistakes.
So it's like having a coach, but for my trading.
Yeah, exactly. A coach that helps you learn from both your wins and your losses.
All right, you convinced me. Trading journal it is. We've covered a lot today.
Yeah.
Any last words of wisdom before we move on?
Just remember, options trading can be exciting, but it's definitely not a get-rich-quick scheme. Manage your risk, do your research, and be patient.
Great advice. Now, I'm curious about something else.
Yet another question.
Yeah. We keep talking about SoFi, but I'm guessing these options, like all this stuff we're discussing, it could apply to other stocks too, right?
Oh, absolutely. Everything, yeah. Call options, put options, all that risk management stuff, the support and resistance levels, even the trading journal that applies to any stock you're trading options on.
So if I wanted to trade options on, I don't know, Apple or Tesla, it'd be the same basic idea.
The foundation is the same, yeah.
Yeah.
But each stock is going to have its own, quirks, just like companies are different. So you'd still want to research and understand those specifics.
Makes sense. So it's like learning a new language. Once you know the grammar, you can have different conversations.
Exactly. Now let's use what we've learned and look at SoFi options specifically. Remember those support and resistance levels.
Yeah, the trading range, like $13.50 to $14 for support, and then $15 for resistance.
Right. One strategy is to look for breakouts. That's when the stock price moves, like decisively above resistance or below that support level.
So it's like SoFi breaks free from that ping pong table we were visualizing.
Exactly. If SoFi goes above $15.50 with strong volume, that's a good sign. Could mean it's a bullish move, maybe towards $16 or even higher. That might be a good time to buy a call option.
Okay, so breakouts can signal a good opportunity.
Yep.
What about those $15 call options we were talking about before? How do those fit in with this, like, breakout strategy?
Well, if SoFi goes above $15, those $15 call options become more interesting, right? Because they have a better chance of being profitable. But remember, we're still managing our risk.
Right. No more than $50 per trade.
Exactly. So even if the price breaks out, we're not going all in crazy, right? We're maybe buying 1 or 2 contracts, keeping those potential losses small.
Okay, got it. But what if SoFi doesn't break out above resistance? Like, what if it goes down below support?
That's a good question. If it drops below, say, $13.50, that might mean it's going down further. You might think about buying a put option then.
Because now I'm betting the price will go down.
Exactly. A put option lets you profit if the stock price goes down. Options give you that flexibility, you can adapt to different things the market's doing.
So breakouts and breakdowns can both be opportunities, but I have to choose the right option, like, depending on which way the stock is moving.
Yeah, that's it. Reading the signals and reacting. Now let's talk about 2 more things and then we're good. Time decay and implied volatility.
Ooh, those sound a little complicated. Can you break them down for me in, like, normal people speak?
Sure. Time decay, we kind of touched on that already. It's how fast an option loses value as it gets closer to that expiration date.
Right, the melting ice cube.
Exactly. The closer we get to the expiration date, the faster that value melts away. Especially important with those weekly options we talked about.
Like a ticking time bomb.
Kind of, yeah. That's why you have to pick an option that expires when you think it'll be most valuable. If you think SoFi is going to move quickly, weekly option might be good.
But if I'm thinking long term, I might want one that expires later.
Exactly. Okay, now, implied volatility, or IV for short.
Okay, you got me?
Implied volatility basically tells you how much the market thinks the price of a stock will change. They go up and down. You can think of it as how wild they think the ride will be.
So high fee, things could get crazy.
Yeah, high fee means traders are expecting big price swings. Low IV means things are probably going to be pretty small.
So why do I care about IV if I'm trading options?
Because the price of options is affected by it. When a FI is high, options are more expensive. When FI is low, they're cheaper.
So if everyone's expecting the price to jump around, the options cost more.
It's like insurance. If there's a higher chance of something happening, that insurance costs more.
That's a great analogy. So how do I even know if IV is high or low? Like, is there some kind of signal?
Most trading platforms, they'll show you the IV for each option. Usually it's a percentage. Now, here's where things get interesting. IV can change a lot, especially around events like those earnings reports.
Right, because those can make the price swing a lot.
Exactly. And when that happens, sometimes IV drops really fast. That's what we call an IV crush.
IV crush. Sounds kind of scary.
It can be if you're not ready for it. Like if you buy an option when IV is high and then the price swings a bunch but then settles down, your option could lose value super fast because of that IV crush.
So I need to watch out for IV and how it might change, especially around earnings reports.
Absolutely. Another piece of the puzzle.
Okay, I think my brain is full. In a good way, though. I'm really starting to see how all these different things work together.
I'm glad to hear it. Any other questions before we finish this little coffee chat about SoFi options?
Let me think. Actually, yeah. I keep hearing people talk about paper trading. What is that, and is it something I should try?
That's a great question. Paper trading is like practicing, but without using real money. It's like a simulation.
Like a dress rehearsal before the real show.
Exactly. You can test out your strategies, get comfortable with how everything works, see how you react when the market does different things, but without any risk.
So I can make all the mistakes I want and not actually lose any money.
Exactly. It's a safe way to learn and get confident before you start using your real money.
And how does it work? Do I need some fancy software or something?
A lot of online brokers, they offer paper trading accounts. It's like a regular account, but you're using virtual money.
So I can play around with fake money, see how I do.
Yeah, exactly. It's great for testing your knowledge about options and getting better without the risk.
That sounds like a good idea,
Yeah.
especially for a beginner like me. Okay, before we wrap up, can we just go over like the most important things we learned about SoFi options trading? Just a quick recap.
Sure. I think the key takeaways are manage your risk, don't get greedy. Only risk what you can afford to lose. Position sizing is super important. Second, understand what actually makes SoFi's price move up or down. We talked about interest rates, the tech sector, all that political stuff, and of course earnings reports. Third, use those support and resistance levels to help guide your decisions. Fourth, don't forget about time decay and implied volatility. Those can really impact your trades. And finally, keep that trading journal. It's your best friend for learning and getting better at trading.
Okay, I think I got all that. Anything else before we wrap things up?
Anything else? Good question. I think just remember to come at this whole options trading thing with, like a learning mindset. Don't expect to be a millionaire overnight or anything.
All right.
Focus on understanding how it all works, testing out different strategies, and just gradually building your knowledge.
So more like a marathon than a sprint?
Yeah, exactly. And like training for a marathon, you need to be consistent. Keep learning, keep practicing, and, don't freak out if you make mistakes along the way. Those mistakes can actually teach you a lot.
Yeah, that's true. Easy to get discouraged when things go wrong, but I guess you learn more from those setbacks.
Definitely. And that's where that trading journal we were talking about comes in handy.
Right,
It
yeah.
helps you look at those mistakes, really analyze them, and maybe you'll start to see patterns. And then you can adjust your strategy and get better over time.
You're really, like a personal trainer for my trading skills.
Exactly. And the more you practice, the better you'll get at reading the market, making smart decisions, and just managing your risk.
This has been so helpful. I feel like I actually understand SoFi options trading a lot better now.
I'm glad to hear that. But we really just scratched the surface here, There's always more to learn about options trading.
True. But it definitely feels a lot less intimidating now.
That's the goal. And even though we focused on SoFi, all this stuff applies to trading options on A and Y stock. You just gotta apply what you've learned, do your research, and figure out what works for you.
Yeah. It's like we've unlocked a new set of tools to help us understand the market better.
Exactly. And with some practice and dedication to learning, you can become a much more confident options trader.
I definitely feel more confident and informed, that's for sure. Thanks so much for sharing all your knowledge with us today.
Happy to do it. And remember, everyone, knowledge is power, especially when it comes to investing. The more you know, the better decisions you'll make.
Couldn't agree more. And all our listeners out there, thanks for joining us on this deep dive into SoFi options trading. We hope you got a lot out of it. Keep learning, keep exploring, and keep diving deeper into the world of finance.